Good day all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday evening. We are at the 24th of August, 6:55 p.m. So when looking at the market, my friends, another day of up in the stock market. What's new? It's day after day. The breaks in it are short. The market keeps going up. I keep reading articles that the prices can't grow to the sky, and yet they are. Until it's over, it ain't over. You've heard me say that. Do you get out sometimes too soon? I'm guilty of it. Who isn't? But there's nothing wrong with being on the right side of the market and taking money off the table. At the end of the day, that's what trading is about. As we look at the energy markets, pretty stable, really not going anywhere. We're at $45 in Brent. We're about $2.50 cheaper in the crude. Bonds and notes, they're not going anywhere, I think, in front of the Jackson Hole Symposium that's coming up starting on Thursday. You're going to hear all the central bankers talk about what they think money policy is going to be, how big of a position you want in currencies or anything in front of that. In the metal markets, well, it's a mixed picture. We keep hearing about all this breakthrough that keeps going on where they can treat now with a product, a chemical product, and on surfaces, get rid of COVID-19 for up to 7 days. Airplane stocks took off today, up 6%, almost in jets, J-E-T-S, the ETF. S&P the weekly, well, we're up another 1% for the week so far. I said, it's the never-ending bull market trying to pick a top, give up on it. Just join in until it's no good. And what keeps the market good has not been this picture of higher highs, higher lows. That's not what's at work in the market. What's at work, in part, is that the market is staying over the 18-day average of closes, keeping an upside bias. What's working is the restraint on price when it gets to the upper Bollinger Band, not shooting dramatically above it. What's working is the embedded reading. Until it's lost, the market each break is offering traders a ways to come in. When it's lost, the market's giving you the correction. I just gave you what's there. Don't believe me? Run back and look at the charts. It's crystal clear. Crystal clear doesn't mean it's easy to trade, but it is clear. All right, let's take a look at this next part. Give me 1 second. Okay, we had a message come up there, so let me fix it. Embedded reading, trend up, bias up. You hit the upper Bollinger Band. I think the pros took money off the table today. And I think they're waiting for a pullback to buy the market into this break until that embedded reading is gone. In the Dow, you came down, had your one moment of flash here where you kissed losing the embedded reading. You didn't quite get to the 18-day average. I was hoping you would. You didn't. And now the pattern is one where you're gotten bullish again. So now you have a higher high, lower low. But again, tell me where the support keeps coming in, that 18-day average of closes. And the market I'm not in love with is the Russell. The momentum's lost. The chart has got a bearish pattern in the slow stochastics. It has refused to close under the 18-day average. That's the only thing that's good about it. In the VIX, told you that I wasn't in love when the pros wrote this 2110, and I thought a number of them might have gotten out with a small loss. It let them out with one rally to scratch the trade right here if they were smart enough to. I don't know if they did or didn't. But I'm learning that embedded reading, until it's lost, it's hard to fight it at that point, even though you keep falling in this market. In the T-bond market, I see a broad swath of a run to the upside, the downside. You're going nowhere and you're not trending. You're just sideways. I see the same thing to a degree in the 10-year note, although right now this market is saying lower highs and a lower low. It went bearish. To negate the downtrend that just took place, you got to get over 139.23. I think the pros will try to press the short side at 139.20, but over that 139.23, 3 ticks, $100, I think they call it a day. If they're right, they'll look to see how far they can press it. Dollar index, higher lows, higher highs, turned bullish. I did not think the dollar last week was going to do this, but it has. First thing you have to have when you're a trader is an exit, right or wrong. Market, until it takes out this low, it's trying to work higher. Could it get into the 93.80 area? Certainly could. Eurocurrency, flip-flop of the dollar, turned bearish. Now you got to take out the high right back here, which was 118.80. Could this market be headed back into the 117.20s? Well, with the symposium in Jackson Hole taking place with bankers all over the world, how do we know what they're going to say? Maybe this whole uptrend is now a profit-taking spree in this market and the dollar, and the market restarts trending back right after the symposium. That's my bet on things. In the Japanese yen, for the moment, the market just keeps hugging the 18-day average. It tries to put in lower highs, but it has higher lows. It refuses to trend. Bitcoin, just hanging here against the 18-day average. It's still bullish. Until you take out these lows, and that low, if I'm correct, right here, the low of that day was 11,745. I knew I did that wrong. 11,745. Your breaks have not taken that out, as you can see, so the market's still basically bullish. Take that out, you neutralize the market. Momentum down, bias up, trend, higher lows, lower highs. Difficult. The differential between Brent and WTI back in that 250 range. So $2 has been too cheap. $3 looks a little expensive. You're about where the market seems to feel comfortable for the time being. And as I told you on all these energies, with the exception of gasoline, and I said it last week, I think it's so dangerous to try to trade what I call a pipe, just that sideways action that is frustrating. You try to break out, you don't get it. You try to come down to push it, you don't get it. Same thing going on in this. Where the gasoline market has been doing is it was there and it's been pushing to the upside, but it has an embedded reading. The other markets don't. Nat gas, don't get enamored that this market has to go up with these hurricanes. The amount of platform gas rigs we have in the Gulf are not what they used to be. But the demand is here. We know that the market's seeing less supply right now, and the market's responding to the storm. Want to remind you, if you're a trader, one of the things you might want to look at is our trading tips from Modern Trader magazine. I love this particular brochure that they had put out a long time ago, and I resurrected it with the editor many years ago, and it's been a mainstay for me because it teaches you ideas. Relative strength. You know I use slow stochastics. Concepts, very similar. Money flow. Where's the money going? Buy, sell. Which way? You want to see what that's doing. I'm not a bottom or a top fisher, but if you are, I guess it's an idea, but I do believe in optimizing stops in different ways. Now, what is optimizing stops? It could be as simple when I tell you you have an embedded reading. When you lose it, you're out of the market. That's a stop. It could be a straight number. That could be a stop. It could be you get to a Bollinger Band and you move a stop way up. Another way, optimizing them. Trying to figure out ideas. I incorporate much of this in my trading philosophy, and you could too. How do you get this? It's free. Go to our website. On the right-hand side, you'll see free offers. Choose the ones you want, and away you go. I'm Ira Epstein. Thanks for watching.